You would think that NVIDIA is now selling tortilla chips. We got a lot to go over. Powell's second day in Congress. Was anything really notable said? Who knows? All that and a lot more on today's episode of Money Never Sleeps. Welcome back to Money Never Sleeps. I'm cleaning my glasses right now because I cannot see. Before we get into anything today, just a reminder that me and my friend Mr. House, who's joining me right now, are not financial advisors. Nothing we say is financial advice. We're just a couple of guys that love talking about the market and being good citizens and paying our taxes and doing all the right stuff because guess what? That's the game that we got to play. But again, financial advisor, consult with them if you want to make any decisions or do your own research. House, thank you for joining me today as I clean my glasses. How are we doing?
Doing decent. Yeah, messed up my ankle last night at jiu-jitsu practice, so it took me a little bit longer than I expected to hobble up the stairs and get in front of the battle station, but we're here, and that's what matters, because money never sleeps.
Oh, good, man. I hope you're feeling better. Well, obviously, it's only been a day, but I hope it does feel better. This has been a really kind of boring day for me. I haven't been watching the markets too much. And the reason I say that is because I still believe that this is the week to do less and not worry about as much of the price fluctuations. I mean, they're rallying like it's the bank term funding program is ending or something right now. No, you got 2 days for that. So of course that's why it's rallying a little bit here. Plus, they're saving banks left and right after yesterday's New York Community Bank. That's hilarious. I'm gonna pull up this real quick because I don't really want to talk about it too much, but I do want to pull up something that's really interesting because again, we know bank collapses, they don't happen from Wednesday into Thursday, they happen from Friday into Monday. It's how it always happens, right? So let's pull up this. This is from Finance a Lot. Great Twitter account if you guys aren't following. New York Community Bank disclosed its customer deposits had fallen to 77.2 billion, roughly down 7% from the 83 billion it had on February 5th. Will this bank survive the weekend? I think that's a pretty big question. At one point, they had $100 billion worth of customer deposits. So that's why when I saw that $1 billion, I'm like, okay, well, that'll get them through the weekend, hopefully. I think there's definitely going to be this type of mentality of bank runs when we start seeing banks like this, their equity price just start dropping. And then now we're also seeing their customer deposits have been fleeing slightly. 7% a sizable amount, but this is something that I think we're going to have to get prepared for and see a lot more of in the future. Again, fear spreads faster than I think greed in some ways. And once that does hit, I think a lot of people are going to be like, well, I don't want to get my money caught up in this. I don't want to deal with the FDIC. Speaking of which, the FDIC, 8 new banks that are now on their watch list. They didn't name them, but we can definitely have a guess at which ones those are. Probably have a lot of FHLB as percentage of operating equity. But yeah, it's where we are right now. That's kind of, I think, the most important thing going into this weekend because we aren't doing a show tomorrow. But I'm not convinced yet. I'm sorry. Maybe I'm just being a stubborn old bitch, but I definitely think that there's problems with the banking sector, and we'll probably see more of that moving forward.
No, yeah, I mean, I think that's fair. I think I shared a tweet with you yesterday, kind of showing a little bit of that, I don't want to say resiliency, but more so just no one wants to let it happen. And I mean, for good reason, right? Like if you're in that position, because it doesn't just damage the banks and looks bad at the banks, it damages everyone for a while. But at the same time, you can't just manipulate everything and have it your way. Like if you messed it up and ultimately something you did is causing that crash, you can't just keep propping it up because eventually it's going to tumble, and it's only going to get worse the higher it falls from.
Absolutely. And I think the other thing too is Mnuchin coming in, jumping in the slip and slide with that $1 billion just to make sure that everyone feels okay. That price fluctuation before lunch as opposed to after lunch, we'll look at the chart in a second. So stupid. And that's why Chris brings up a great point. Far enough for people to start fleeing. The other thing is you probably don't want to see the fire sale just begin right now, just yet. There's probably a lot of people who are still somewhat trapped. I'm not saying they're trapped for good, but I'm saying that there's probably a lot of people who just prefer not to have to deal with a lot of these assets losing value on their books. I think Mnuchin might have a bit of a tax harvest loss if he is getting equity in part of this company. So that $1 billion, I think, is nothing for those three partners that are involved in this. I do want to pull up New York Community Bank real quick because that rally after lunch, we didn't look at it on the charts yesterday, but fucking hilarious. Let's go to the 1 hour, and then you can see when everyone went across the street to Sabaros, and then and then when he wrote the check itself, there it is. Look at that, the 1 hour. It literally gapped up. I mean, what is this? This is 82%. It shot up all the way, and that's from after the retracement. But let's go from the low down here to where it was up here, 145% off of that news. Right. Here's the thing. Nothing's going to happen. This isn't something I think that people are holding long term. I think that was just a great liquidation trade. How much money is in the market cap actually for this bank right now? 2.63 billion. So I mean, it's a little bit of it's a good squeeze, I would say. But it seems like people are going to continue to bet until the bets just don't work anymore. This is just a hilarious chart, in my opinion. This is so stupid to see even the shorter time frame.
I mean,
Yeah.
honestly, like I don't understand the logic in right now that check, right? Like to equate it to, perps trading for crypto, because that's where my head's been at. It feels like you're throwing money and adding collateral to a trade just because you don't want to get liquidated. But you have that gut feeling that regardless of how much you throw at the trade, you're gonna get liquidated, right? It's like, so what are you writing, like $1 billion check? It's like, how long does that realistically last them for, right? Like what is the holdover period for that? Because $1 billion is $1 billion. Don't get me wrong, but when you start talking about banks, real estate debt, $1 billion isn't as big of a number as it seems to be to, like, your everyday retail consumer.
It's like your aunt giving you $5 for your birthday. That's
Exactly. It's
it's
like it's
literally
getting
all it
that
is.
check or that bond from your great grandma when you were younger.
Oh man, those bonds. Bonds are going to be a hot topic in the next few months, but let's move forward. I wanted to pull up this as well out of Asia. We do know that it seems they are going to raise rates in Japan, and the Nikkei is kind of reacting to it. It'll be the first time since 2007. Say what you will about that year and that number, because that is a very famous year for a lot of things following that weren't good. But I'm going to pull up this. This is actually out of China. Their exports were reported higher. I say that the exports top forecast as global demand returns. I don't know about that, but the number that they said is that it came back, I believe, 7.1%. Yeah, 7.1% higher than the year before. Shows that they're beating the Reuters poll that expected an increase of 1.9%. Imports were up 3.5% compared with the poll forecast growth for 1.5%. However, what happened in China that followed was very much a sell-off. We saw a pretty good move to the downside in the Hang Seng. We saw all of Asia pretty much sell off last night, which was really interesting to me. And again, we know that there's a lot of problems both in China and also in Japan. Very different problems, but nonetheless, they are problems that they're going to have to face fairly soon. But just want to pull up this chart that we're seeing with the Hang Seng. It's in this ascending triangle. At some point, it's either going to break up or break down. Obviously, this is more of a bearish pattern. It's probably going to break down, in my opinion, if this were to be the case. But we're just kissing the bottom of that trend line. We got rejected from it. Tonight's going to be really interesting to see how they close the week. I have a funny feeling they're probably going to buy this back tonight, and it's going to go back into here because 7.1% would be a good number, right? If you believe that's the actual percentage that it's increased by. But I'm not necessarily sure traders are feeling that way. I do know that Goldman Sachs was saying, hey, get your money out of China. Goldman Sachs has been unapologetic about that too. So I wonder if foreign investor money is starting to pull out once again. And if that's the case, might be time for a little bit more stimulus that could be coming that way. Unless, they want to save it for dire times. But I do think that throwing money at the problem, very similar to New York Community Bank, can't solve it forever. I think the underlying metrics are going to be way more important moving forward. I don't believe that demand is getting better. I think they might have had a good month, if that, but I don't think it's a sign that, Germany's recession, the UK's recession, Japan's recession are signs that the economy is needing demand, that there is demand for a lot of these goods and products. And
Yeah, I mean, it's a tricky situation. I haven't liked a lot of how China's looked, coming off the back of Country Garden and Evergrande. So it makes me a little bit weary to see, you've had the two biggest real estate giants and development agencies going underground, and all of a sudden demand sparking up. It's like, okay, if demand's up, but can people meet demand? Because granted, that's a small subsection, and that's only two companies with a large market cap, but it's like it doesn't give me lingering confidence in the market as a whole,
No,
especially with how the Hang Seng performed after the stimulus, when a lot of it was like, yeah. So like, yeah, I'm not fully bought into it. I think we're on the same page there.
yeah, definitely. And you know, everyone's got problems right now. It's just a matter of who's going to acknowledge them first, and I think that's going to be the big thing. I do think that Japan is probably going to be the one that might be the one. Maybe again, I don't know. I don't have a crystal ball. If I did, I'd be a rich man, but I'm not. So when I look at this, the Nikkei, I'm thinking that people are kind of pricing the fact that they're going to raise rates. Look, the dangerous thing about the Nikkei is how overbought it is, obviously. But if we look at this on the 6 month, they raised rates in really weird times. They raised rates back in 2007, which was the top down here. So this little move down here, so right around the time they raised rates, and obviously that was a really good rally that they saw in 2005 to that point, and then it tanked. Right, they raised rates back here in 1989. I think it was like the summer of 1989. It shot up a little bit higher afterwards, but then obviously we had the lost decade. Here we are right now. They're in a recession. They're going to probably raise rates, and if we look at this on the 6 month stochastic RSI, it's completely overbought. Now, is it going to go down to the level it did back in 1989 down to say 2008? Who knows? I really don't know, but I think it is possible we could see something very similar to the lost decade if Japan's got a really interesting economy where it has its ebbs and flows, where it does extremely well for a period of time, and then it just has a period of time where it just cools off. Can't remember who it was, which economist it was. It was like there's four different types of economies. There's first world countries, third world countries, Argentina, and Japan. All of the reasons Argentina should be successful, it's not, and all the reasons that Japan shouldn't be successful, it is. And I think that's really interesting because we're probably going to see this part where maybe the things that shouldn't make Japan as profitable or as successful as it has been probably pull back, and we kind of see that reality of okay, maybe this period that we had from 2008 to where we are now, this QE period that we had in global markets, this is going to catch up with a lot of people that probably never really recovered from 2008, and it's just a matter of time before that euphoria blow off top kind of settles down. And obviously it leads to a recession or a depression. I'm not going to say depression because obviously that would be worst case scenario, lost decade for everybody, but I do think that we're probably going to see a good recession for most of the world, if not Japan just entered a pretty good one, which we have yet to see the full effects of. Let's see this here. Let's talk NVIDIA, right? That's J-Web saying, and he's not here today, which is good for us because usually that means the market crashes. But let's look at that type of bullshit mania that's going on over there. And again, I have no problems with NVIDIA. It's one that I've said many times. Don't short, don't trade. Kind of is the mentality that I've had with it. Again, do whatever you want. You're your own financial advisor. I'm not your financial advisor, but NVIDIA is just one where you can't fight it. If you had stock in it and you're taking profit along the way, I mean, you're doing great. But there's a lot of people that are trying to fight this right now, and there's a couple of things that you have to be careful of. Obviously, you're above the 50 and the 200 EMA, but I mean, you're above it back here in February, and since February, it's actually shot up, 38% since earnings.
Up only season, man. Up only season. Jensen Huang's probably just sitting there at his desk, like, yes.
I'm waiting for that vendor financing to come bite it in the ass, but I can't. I'm not gonna fight something this strong in the market. Obviously, I mean, I don't know if people saw this either. Let me share my screen again. They had another interesting metric. Nvidia's market cap is now bigger than the GDP of Italy, Brazil, Canada, and Russia. I also saw that their GDP, their market cap's larger than the economy of Germany today. It surpassed that as well. So the third largest economy in the world currently is Nvidia. Just so everyone knows.
I mean, it almost, to an extent, it almost makes sense, right? Because essentially, you know, betting on NVIDIA is betting on the power of GPU and AI. And at the rate things are moving with the speed of AI acceleration, I mean, hey, when these autonomous agents come in, they deserve it. They deserve a third of the world's or third biggest market cap in the world because I mean they're powering it, right? Like that's kind of the narrative that we're playing with for NVIDIA continuing to shoot up. it makes sense, but it's one of those things where you would look at it like a year ago and be like, nah, there's no way this ever happens. Like
Yeah.
the demand doesn't get that big, but now that it's here, it's like, I mean, it makes sense. Like I can understand why it's happening.
I think the value for it right now makes sense, but when reality hits with everything, the global economy, bigger problems, more debt that's going to come due in the next few weeks to months. And I'm not saying this shit collapses instantly, but but there is a case that this thing could absolutely pop, and it's just terrible, right? I mean,
Oh yeah.
between here we are now and the next level support, you're lucky if the 50 holds a support. I hate to say that, but you just have not built the foundation for it to grow upon in the short term. Obviously, that's a 25% move down. I think that more of your support's going to come down here around the 200 EMA, which is 510. But could you imagine that if we just woke up one morning, limit down to the 200 EMA and it's 44%? What would that do to the major indexes with how much I think it's like 26% of the S&P is weighted towards Mag 7. I think majority of that is NVIDIA itself. Like that's the reason why I think that it's stupid to get too excited or want to short things right now. Personally for me, but let's just be realistic. This
Well,
100% is what we're looking at. There is no support there at all.
to your point though about not wanting to short it, right? It's like say that we do get that kind of flash crash down, like if we hit that 200 or 50 EMA range, I'd probably be a buyer between that entire range, right? Like I don't know exactly what price or I mean it depends on the circumstance of the day, right? Like if it just keeps bleeding, I might wait and see till the volatility dies down. But like you gotta imagine there's a bunch of people who are upset they don't have Nvidia in their portfolios, and it was like the classic like this isn't going to go up by next week, I'll wait until next week, and then next week turns into up 500% on the year, and so you've like literally been priced out, right?
Yep.
So when that comes down, you've probably got the savvy institutional people who are eyeing, okay, we're looking at 508 X amount of shares, and then we're going to start, market making or getting our position back up. But then you got retail who's mostly just emotion driven on, okay, this thing hit 900, it's going back up, right? Like anchoring bias out the wazoo. 900 is the price, like almost like the last thing with Bitcoin, right? Where everyone was so ready for it to just hit 69 again, 69K. Which when we get to crypto, I have a kind of funny and interesting point on that. But yeah, I mean, I think with Nvidia, oh man, the narrative is so strong. Like if you believe in AI, Nvidia is kind of like the thing that makes the most sense, right? Like AI long term. Eventually, you're going to want Nvidia ARM or something along those lines in your basket.
Yeah, I couldn't agree more, man. I think that a lot of people hate missing out on gains. That FOMO is so real to the point, like you said, out the wazoo. I just love that word too. But I think that we're just going to see a lot of people who are excited to buy at 500, right? A lot of people that are going to be excited to buy at 600, 700, all the way down. I mean, they bought every dip as is.
Mm-hmm.
Probably going to do it again. The question is, are they going to be able to keep it? Are they going to sell it, months later because the price keeps dropping? Who knows? I do think, though, to be bearish on tech, you have to be bearish on the banks. That's
Mm-hmm.
ultimately the one thing you have to. I think the two are so correlated in the market that
Yeah,
it's almost perfect to see if the banks fail, you're going to see tech fail.
yeah. I mean, because for a large portion, right? Banks will extend large lines of credit to these tech companies based on their valuations and what investors see. So they'll burn through cash for the first 3 or 4 years of their life before they have a product or service that starts getting them money. And at that point, you've got a pretty, I don't want to say you're indebted to the banks like as like a slave or indentured servant, but you're essentially in a spot, right, where you need to make sure the bank and your investors get back their money. So you're in kind of a weird trilemma there, which Nvidia is probably broken out of at this point, because if you don't have Nvidia in your PC, you're missing out. And that's only gone up in price since 2014. As far as like I mean, I got my little G-force I'm looking at right here, right? I live and die by it. But yeah, I mean, it'll be interesting. If it goes down to 500, I'm definitely adding some Nvidia. I can't just keep buying the product and not buying the stock. That's just where I'm at right now.
Got to do the J Web method, man. That's the only way. That's the only way out of this system. Um, this is what I just want to point out too before we move on to Jerome Powell, and then we'll go into crypto. I don't really want to talk about Jerome Powell. He said nothing again, but this is called leverage. That comes from banks. Super microcomputer. Let's look at that. That's all leverage. Banks go bust. There's no more idiots to put money at the top and keep pushing it up. That's all I'll say. I say that because Monday, banking funding program ends. Starting to see more. Actually, we're starting to see less reverse repo counterparties participate in the overnight repurchase agreements, which means that there's less and less people that have liquidity to park at the Fed. It's easy money to park at the Fed, but we're starting to see that come down. Definitely something to keep in mind. I think that's just a sign of liquidity and leverage within the system that could go. But again, that's just some things that I focused on and noticed over the past few days to weeks. Jerome Powell, I didn't really care too much for what he said. I've been looking at Twitter. I think the only thing that he mentioned that was of any interest to me was that there will be some bank failures due to CRE risks. It's the only thing I thought that was notable. For the most part, it seems like the market just loved everything he had to say because we're kicking ass today. Nasdaq's up 265, up 118 for the Dow, up 49 for the S&P, and the dollar is tanking while gold is rallying. It's something's up. I just don't necessarily know what it is, but I'm definitely feeling that investors do believe Jerome Powell and everything he does say.
Yeah, I mean, at this point, people have been waiting on Powell to, really, really take a hard stance on something, and he hasn't. So let's just keep playing the up only game. I feel like that's probably the mindset of a lot of people. And there's like, with for some good reason, there's at a high level, there's a lot of reason that, or at least a lot of narrative that people are like, we're in the bull. Tech's going up, crypto's going up, right? So I can understand why people do it. I'm not following the same train of thought, but I'll empathize.
Yeah, and to go align with that, with people feeling pretty good, we did get some kind of data today that's jobs are actually I think it was job claims, initial jobless claims increased a little bit, not much. It was like maybe 1,000 jobs. I think it was 216. Expected was like 215,000. And then we also saw that continuing claims are continuing to stay elevated and rise a little bit. So are we picking up into the mass unemployment layoff phase of this market? I have no idea. Again, I'm just being as conservative as I can possibly be with some of the statements and just thinking long term as opposed to short sighted and hoping that things turn around fast. It does go when it does go fast. So I think what we're getting today is a little bit of investor confidence where he's paying the investors pretty good confidence to think that everything is okay. We're probably gonna get the same thing from the State of the Union address tonight, but we are starting to see those layoffs ramp up. I think January and February also were the most layoffs that we saw since January of 2009. So very interesting things we're starting to see. Let's see if it picks up. But let's get into what you and I both care about. Let's talk about crypto, man. Where should we start today with that?
So let's start with Bitcoin. So I actually heard something today that I've heard before, but it's been a while and makes a lot of sense. So, essentially, if you look at, depending on which exchange, we broke above or just hit 69K, which is the previous all time high. And that was what, 2020, 2021. People
Yeah.
aren't accounting for the inflation adjusted price, right? Like Bitcoin's price moves, but US dollar is just getting inflated. So I think the number I heard today was realistically to meet the same all time high in USD value adjusted for inflation, we would have needed to break above, I think it was like 82 to 86,000, right? Like that's how much USD has inflated since the last Bitcoin all time high. So like on paper, yeah, it's the same all time high, but it's not the same all time high. Like I know you know what I'm saying. So I thought
Yeah.
that was really interesting, right? Because I don't think people understand the purchasing power of money and dollar exchange rates, which is something that you focus a lot on and is really important to keep an eye on for these purposes. So I thought that was really interesting. But no, I'm kind of looking at, we haven't seen much go down. ETH just broke above 3,900 again, kind of while we're talking right now. So, you know, I know yesterday we discussed a little bit that there was a lot of perps and options data expiring. So I haven't had a chance to look at that yet today, but I'm wondering as a result of that, maybe we squeeze up a little bit here and then, Bollinger Bands also based on the RSI and stochastic RSI. I don't think it's too far off to say that we could squeeze up to like close to 4K ETH, maybe hit 69K again and attempt for 70K Bitcoin. Um, but you know, I think if we're really gonna embrace the we're in a super cycle, this is the bold narrative. I don't think tapping 70K is enough. I think there needs to be a quicker run up to like the 120K level, right? Because I think and I don't know, I don't really think that's going to happen in the next
Right.
month or so. If someone wants to prove me wrong and pump my bags for me, like sure, I hold some spot Bitcoin, right? I wouldn't be that upset. But at the same time, it's like I don't know that we have the inflows, even with the added ETFs, to double the price of Bitcoin where it stands right now in the next month or so, right? Like market cap double, price double. Like I'm having a hard time seeing that. Whereas I could see, a quick squeeze up. We sit there for a little bit and then we price correct because there's not enough firepower for the next leg up, right? Like I think at some point there needs to be a correction so we can go back up, right? Like I'd love for the price to go up, but ultimately there's a lot of stuff we need to sort out, and there's not a lot of local support below us. So when things do start to go and go quick, I mean, hell, we saw it the other day and talked about it yesterday, and I'll end with this, but that was one ancient whale dumping a clip of Bitcoin, taking some profits for the first time in 14 years. What happens when more of those guys are like, okay, if not 69K, 70K, 72K, how much more Bitcoin do they have than him, right? Like, if it gets to a point where people are comfortable taking profits and maybe it's that inflation adjusted at 82 or 86K, whatever it is, like, it's a lot of money. People would honestly be dumb not to take some off the top unless it's to the point where they bought all that Bitcoin illegally, dark web type stuff back in 2012, and they physically can't take it off chain without ending up in a courtroom. But other than that, it's like what's the point where you take it off the top?
Don't you overestimate don't you overestimate people and what they'll do with money. Just kidding, man. Two things. One, you made me laugh when you said that ancient whale just dumped a clip of Bitcoin, thinking he had like 15 Bitcoins with one in the chamber, pretty much when you said that.
Oh yeah.
And
Hey, it's like,
it's
it's
just
like Nate Dogg and
screw
Warren G, 16 in the clip and one in the hole.
it. Oh man. And then the other thing too is I laughed when you said 120, and the only reason I laughed is because it would drive me insane to see Tom Lee of Fundstrat just be right. And I was like, "Oh, man, fuck." I agree with you 100%. That would verify
As
that
I
we're in a
as
bull.
I said that, I was just picturing the Mike Alfred tweet that you were gonna send to me. Like, I can't stand this dude.
Dude, well, he blocked me for calling him out on his bullshit. If he wants to hold Bitcoin and wants to keep buying it up here, I don't care. You're a grown ass man, right? But I just want to pull up the funding rates as well because they're also so
Mhm.
fucking long again. And it doesn't mean that we can't push up, right? I do definitely do think that it's possible that we do squeeze up once again. I also don't care about the Bitcoin price too much right now up in this level, it doesn't matter to me. I can't really make a move either way unless we get confirmation, right? I'm looking at, you made a really good call yesterday. I know you and Jay were talking about Solana, and that pumped to like 138 the last time I saw. So that was a nice call.
Dude, it's up. Add 10 to that number. It's up to 148 right now.
Yeah, man, that's a great call. See, there's things like this that can definitely squeeze up right now. So that's why I think that it's really dangerous to be saying, "Oh, I'm going to short this 100% with like 5x leverage right now." It's like, you right now there's a trend, right? There is a trend to
Yeah,
the
I
upside.
mean, I think, and alongside not necessarily even correlated, but alongside that trend, one of the weirdest things I've been. No, I gotta sit on mine until I got kids. Otherwise, I probably would have already lost it all by now. But probably one of the weirdest trends that I've seen with where we've been at in the market the past month or so is venture capitalist labeled wallets that are confirmed their wallets have been TWAPing into dog with hat, other meme coins, and the new like experimental standard of it's being called like ERC 404 and DN 404, which is basically divisible NFTs. It's a mixture of non-fungible and fungible token. But just the fact that people are creating these meme coins with like 20 million total supply, not recognizing unit bias, and then a big VC firm can be like, oh, I can put a quick 100K into this every time the time weighted average price adjusts to my target, and then instantly make myself more money because there's literally such small token amount relative to the liquidity supply that they're actually just printing magic internet money. It's one of the funniest things I've seen. But just looking at people in the timeline and be like, dude, New Whale just put 150K into this token. It's like, you realize if you went on Arkham or the bank, you could see that's Pantera Capital's wallet. It's not New Whale, their ancient whale that's been buying this token longer than you.
Man, we're just bringing in all the first timers right now too. That's the other thing, right? Everyone's shiny prices. Everyone thinks they know what they're talking about, and it's dangerous because it's more dangerous now than I think it was back in 2021. Obviously, because the shit in the can has been kicked down the road so fucking far. You're pretty much got 700 pounds of shit in a 20-pound bag just hanging over everyone's head right now.
I will say, my brother's girlfriend slash fiance did text me like 3 or 4 days ago to let me know her doggy coin has finally in profit after a year. And I was like, what's doggy coin? She sent me the ticker. I was like, you mean Doge? She literally kept typing out like DOGGY coin or DOG-E. And I was like, I should have assumed it was Doge, but just because, been a little bit in the DGen ticker street where you never know. It could be a different contract address, same ticker. And I was just like, yeah, this is the point where like she does not pay attention to crypto. Like my brother's kind of in the middle where he'll stay in touch. He doesn't actively trade. But like when she's telling me that her doggy coin, her Doge is going up and above where she bought it last cycle, which would have been 2020, 2021. I think my brother and her bought Doge at like 8 cents. So I mean, like, yeah, I get nervous whenever she's texting me asking me for what my next crypto suggestion is because it's like I don't have any suggestions for you. I'm not a financial advisor, and I know you're not going to watch this meticulously to the point where like the only thing you would probably have money to buy because she doesn't like the fractional coins. Like I've told her to buy Bitcoin before, and she's like, "But I want to buy a full one." I'm like, "No, okay, so you don't get the whole point here, anyways." So it's like I'm not going to go shill her like study your dog with hat, but I mean, who knows? That may have honestly played out with the rate we're going right now. Like I think dog with hats above $1.50. Like I don't know. Got listed on Binance. It's markets going wild.
Dude, people get pissed at me when I tell them I'm buying bonds. They're like, "What do you fucking mean you're buying bonds? Like the ones that mature?" I'm like, "No, I'm buying like TLT." Like, and they're like, "What's that for?" I'm like, "Don't even worry about it. It's something you would never buy." People love the fast, easy hype money, right? Again, sign of a top. I think that's probably. I mean, again, I don't think we're gonna have to wait too long to find out where we're going in this market, but I think that's pretty much all I had on the agenda today. Is there anything you wanted to add today to wrap it up?
Oh, I will just say, kind of, and I know J Web touched on it a little bit yesterday, but I think we should look at alts in an upcoming episode. Optimism just broke its all time high, and it's looking for a leg up. Arbitrum's performing fairly well. Matic, the token of all tokens, it's been holding above $1 pretty strong. And I do think, before we see a big wave down, I wouldn't be surprised to see, or even just any sort of price correction, I wouldn't be surprised to see a leg up for alts and see some ETH beta inflows. So, yeah, I think other than that, good to call. It was a good show. It's fun talking.
Sweet. Yeah. Again, the price doesn't matter this week. I keep saying that because it just doesn't. Everything's going to change come Monday, Wednesday, and then also next week, or I think March 19th, when the volatility contracts also expire. Once you kind of get that flushed out of the way, you're kind of stuck with some different things. I also saw an interesting thing too. I want to add. So obviously Fidelity just announced that they're laying off a ton of people. That they made a pretty bad trade in my opinion. But the other thing that was really interesting too that I saw was that there was potential government shutdown again on the 22nd, right? Not saying it's going to happen. Fuck, we haven't got one soon recently, right? But if we did, someone said something like it would pretty much screw over the regional banks and their access to certain government help. So, just something to keep in mind. I'm gonna do some research over the weekend. Maybe you and Jay Weber and I can talk about that. But yeah, just the banks are the most important thing in my opinion. And then with crypto, obviously, just I don't know, fucking make as much money as you can. Not financial advice, but I just think that you'd rather want to make money as opposed to not making money. I think it's a lot easier to lose money in this market right now. So obviously, be safe, do your own research, and then don't get caught up in the greed or the mania. That's all I will say. So I think we're going to leave it at that. I just want to thank everyone for being here. Randy, thanks for being here. You're always here. I appreciate you, man. Chris, thanks for being here. I know Leroy Jenks is, watching this back right now. Who else we got? We got Ace, all those guys. I missed you. That's because I am not a smart person. But yeah, we appreciate you guys for being here. We wish you, no holidays this weekend, so just have a happy weekend, I guess. And we'll see you guys soon. Take care.
How are we going, guys?